Well, all of this raises serious questions about South Africa, known for having one of the best regulated financial sectors in the world. Are we in danger of losing that status? To discuss, we're joined by the head of the School of Economic and Business Sciences at Wits, Yanni Rousseau. Great to have you with us, Yanni.
Good evening,
when
Francis,
African Bank started crumbling, let's call it, people were saying, look, it's not actually that big on the market. Maybe this will be contained. Also very different from Capitec and very different from our big banks. We are seeing an effect on Capitec now. Is this possibly the start of the dreaded contagion?
Francis, the Reserve Bank acted very decisively by appointing a curator for African Bank and by splitting African Bank into two institutions, what they call a good bank and a bad bank, and taking the bad assets out of African Bank, ring-fencing it in the 7 billion rands worth of, or 17 billion rands worth of assets taken out for 7 billion rands, to give African Bank an opportunity to restructure itself and become a trading bank again. By taking decisive action, the Reserve Bank effectively limited contagion to the African Bank story. However, we have now seen a downgrade of Capitec Bank. In my view, it was a bit of a knee-jerk reaction by Moody's to show that they can do something that they should perhaps have done with African Bank.
Was it more than that? Was it unfair?
Yes, in my view, it was unfair.
Because Capitec is different.
Capitec is different, but then to an extent all banks are different in terms of size, in terms of controls, in terms of spread of loans, etc. And up to now we have no reason to believe that Capitec is not well managed.
Is there a danger, I'm going back to my first question, for the broader financial sector that has been hailed in South Africa?
Francis, confidence in banking is at best fragile. It's easily broken, it's easily
You can't mess with it.
You can't mess with it. It is something that's earned over a very long period of time. And in South Africa, we pride ourselves on the fact that we've never had a systemic bank crisis, because the Reserve Bank has always taken decisive action at times when there were banking crises. It's a very important role of the Reserve Bank to assume such responsibility, to make sure that bank problems are contained and that solutions are found for banking problems.
Well, let's talk about the role of the South African Reserve Bank, because looking at the African Bank story, some people are asking, were they in fact sleeping for years? A whole lot of people involved, but what should have been the role of the Reserve Bank in your opinion?
I wrote a piece in today's Business Day on the question, how do we make a difference between bank regulation and bank supervision? Now, bank regulation is obvious. It is ensuring a level playing field between banks. They have to register as banks, they have to meet the same regulatory framework, requirements, etc. But the question in my mind after the African Bank incident is, can we really have bank supervision? Is it possible for an institution like the Reserve Bank to supervise banks, or can the Reserve Bank at best regulate banks?
But then do you have a dearth of supervision? I mean, looking at African Bank, the fact that so many people were unable to pay, many say points to systemic, reckless lending. Who should then be dealing with that?
Well, in the first and last instance, the management of the institution is responsible for making sure that it conducts its business in a responsible fashion. In the case of African Bank, we've seen now that the senior management had been replaced. Now, a related question, of course, is whether they earned exorbitant salaries, but that's not the point that we should debate tonight. The Reserve Bank's function is to step in when a bank runs into difficulty. But for the Reserve Bank to step in and assume a management role in a bank while it's a going concern, it's a tough call. So the point where the Reserve Bank should intervene becomes a challenging one. Should it have intervened 1 day earlier, 1 week earlier, 1 month earlier, 1 year earlier? When was it obvious that African Bank will collapse? And by the time the Reserve Bank stepped in, it was obvious that the bank was in collapse. The management resigned. There was no longer effective management in the institution.
Overall, are you supporting the intervention? Because let's look at the justification of the Reserve Bank, that it wants to preserve basically the rights of the poor to take out loans. So if they don't have collateral, they can't with many of the big banks. Others would say maybe it should have been allowed to die. Others would go even further and say with interest rates soaring at 60%, this was a crime against the poor, as Adrian Saville said.
In my view, the African bank collapse introduced a new type of banking risk that we've never considered before. African Bank had over 3 million clients, and if African Bank collapsed, then you had to establish and appoint another debt collecting agency. The poor people indebted to African Bank would not have easily understood that they now have to repay their debts to a new institution. And hence there was the danger of a general view that bank debts do not have to be repaid when a bank goes into receivership. So it's a new type of risk that we've not considered before in banking.
And could create a precedent.
And could create a precedent that can then spill over to your other healthy banks and get them into trouble. Okay,
so we've contained that. In finality, given Moody's stance, what happened on the JSE today, do you think we can weather this storm, that it will in effect just be a little bump?
It will be a little bump. We can weather the storm.
Good. I like that response. Thank you very much. Wits academic Jannie Rousseau. Let's move to other business.